Hi, we're back. Mike Maloney and Jeff Clark. Jeff, how are you doing?
I'm doing great, Mike. It's great to see you again this week. We'll have a lot of fun with this video, I think. So we've got news of the day, chart of the day, tweet of the day, and a good quote. So you'll want to stick around with that. Mike, this first is our article of the day, and this is kind of interesting. It's an article you passed around the other day, and it's called "The Future of Money," and it's actually from the Reserve Bank of New Zealand. And of course, they do not understand the difference between money and currency. They're calling money currency, which is what it's not.
No,
Um, but th-
they're calling currency money, which it's not.
right, exactly. Right. It is not money. This was interesting, though, Mike. As I read through this, I thought, well, this is interesting. They're kind of opening up and asking the public, what you think about this, and you want to weigh in.
Right.
But then it kind of got a little off the rails and actually a little bizarre by the end. It's basically, and people can read this if they want. It's basically about the central bank digital currency CBDC that they want to introduce. But Mike, what was your reaction to seeing this article from the Central Bank of New Zealand?
Well, a viewer actually alerted me to this. And what I got out of it right away, first of all, they're calling it money, but up near the top, that the money that is designed and created by the Reserve Bank is central bank money. This money is like an IOU from the government. And then the next line, money that is created by private firms, such as commercial banks, is money that is like an IOU from private firms, from a private firm. This is private money. And so they're letting people know finally that the only currency that is being used, that is being circulated, that is created by the central bank, which is not actually part of the government. This is usually a government chartered private entity that is the bank of all banks. And their IOUs are backed up by future taxation. So it's backed up by the enslavement of the populace, whereas the IOUs of the commercial banks, the private currency, is IOUs backed up by the solvency of the firm. And then if you've got federal deposit insurance or some equivalent of that. But what I get a kick out, they didn't say IOU for what? What are they going to give you if their IOU fails? An IOU is an IOU something. What do they owe you? They owe you more of the same IOUs. if
Right.
you've got a 10, you can get 10 ones or a 5 and 5 ones. It's just more of these voodoo IOUs, and it's an admission by a major central bank that this is a voodoo, just the phrasing in this sort of lets the cat out of the bag, that the whole system is this hocus pocus scam. It's a bunch of mirrors, smoke and mirrors, that requires us all to believe in it, basically. But they're saying that it can make payments easier and that cash will still exist. But right now, the vast majority of the currency that is being used is private currency, which is created by the banks. It's credit. And it's IOUs for more credit.
Right.
If the bank goes under, they don't owe you that IOU. They're insolvent. And unless you've got federal deposit insurance, in which case you get reimbursed by the government. So the government is going to charge you taxes to reimburse you for your losses. So it's you ultimately backing up everything here. The whole thing, all banking, all central banking and commercial banking, is really this Ponzi scam that the deeper you dig, the less sense it makes. It's just an idiotic system to be using. And this article is a real good one to read. If you want some proof of that, just try and read between the lines. But they're saying that it could make things easier. Now, the next article, though, that this links to is one that Did you find this or did Dan find this?
I think Dan found that it's from
Okay.
Politico, and it's titled "The Far-Reaching Decision on Fed Digital Currency Awaits the Next Chair," meaning who's going to replace Jerome Powell, which could be announced at any day. And this article is pointing out that whoever that is, they're going to have some decisions to make about central bank digital currency in the U.S. So this certainly appears to be the way things are headed, Mike, as you've pointed out for quite some time now. The bottom line for me is that this is all still fiat. That it's all still fiat, even if it's digital or paper or coinage. It's all fiat still.
Yeah.
But Mike, what was your reaction to this article saying that the next chairman is probably going to be the person to decide a lot about central bank digital currency in the U.S.?
Well, and that the next chairman is going to, in this article, it does say that that Powell leans one direction and Brainerd leans another, and they are the most likely. It's going to be one of those two to end up being the next Fed chairman. And so whether or not this happens will depend on Biden's pick. But the thing that I find interesting about it is that there's a thing in here, depending on the design, CBDC may have the ability to lower transaction costs and increase access to digital payments. In emergencies, CBDC may offer a mechanism for swift and direct transfer of funds, providing rapid relief for those most in need. And it talks about how beneficial this could be for the population, that the central bank can create currency and just give it to people right away, that it's going to help everybody. It's going to lower transaction costs. They never once mentioned that this is probably going to be programmable and that they will be able to control all of us more through this. But way down in the article, it says that I'm looking for it right now, but it has also sparked strong pushback from the banks, who have questioned the benefits and warned about potentially severe negative consequences. What are the negative consequences? The banks will be out of business. There's no reason to have a commercial bank involved. So this is almost what we've seen is a tremendous diversity in the amount of banks that there have been, over 100 years ago. And it's become more and more consolidated into fewer and fewer and fewer commercial banks, with the central banks in every government taking a larger and larger role and having more control over the currency and the economy. And now this could mean the elimination of commercial banks. Now, commercial banks, they've got a very strong interest, and they can really flex their muscles when it comes to the vote and swaying people's opinions and so on. And so this is an uphill battle unless they somehow include what is left of the commercial banking system, because it's been whittled down to very few big players, where it was hundreds and hundreds and hundreds of players before. And so you had this role of competition. Well, the competition has gone, so we don't have a free market in currency. We have except when you go over to cryptocurrencies. That is the free market trying to sort things out right now. And it's pretty messy over there because this is early on. But they are, the whole reason that they are all talking about this, whether it's the private banking system or the central banking system, they're all talking about it is because of the threat that cryptocurrencies have created, that private currencies, and they are scared to death that private currencies, and they especially mention ones that are the tokens that are pegged to the dollar, so-called stable tokens. The dollar is not stable, but when they're talking about stable coins that are tied to the dollar, that's the biggest threat to the dollar. It lowers transactions costs and it gets rid of the need for a bank or a central bank. And so I find these articles really interesting. People need to read them, and they need to read between the lines.
Yes, good. It's good to be aware of what could very well be coming, but all of this discussion, Mike, makes me feel really glad that, or thankful, since it's Thanksgiving, right? That I own physical gold and silver. It's something tangible outside of this central bank monetary system. I love it. So that's a great advantage of physical gold and silver, right? So, well, switching gears here. Here was an interesting tweet from Bernie Sanders the other day. We must demand that the extremely wealthy pay their fair share. Period. What do you think of that, Mike? Pay their fair share.
I'm sure it's way down in the replies to this tweet at this point. But my favorite reply was Elon Musk saying, "I keep forgetting that you're still alive." I thought that was hilarious. But the wealthy pay way more than their fair share at the moment. Way more. There's a chart that follows this up. Do the rich pay their fair share? And this is sourced from the IRS. And it shows you how much taxes are paid for the bottom 50, the bottom 50%, how much they make of all of the income versus how much of the taxes that they pay. So they make 12%, but they pay 3%. The top 1% make 21% of the income in the United States, but they pay 40%. However, this is IRS data, and it's not including the payments and subsidies that people get from, we get to use roads. A lot of people get direct payments from the government. We get aid in different form. And the bottom 50% is they are a net negative to taxes. And the top 1%, it's way more than 40%. I think the top 1/10 of 1%, no, it's the top 1% or 2%, pay like 108% of the taxes when you include all of the transfers that are happening, because there's that extra 8% is actually going to the people, the middle. What I find interesting is the break-even point in this chart is the top 5 to 10% of taxpayers. So the 150 to 220, I'm rounding figures here, but they make 11% of the income and they pay 11% of the taxes. So after 220,000, anybody making more than that is actually paying more than their fair share. And anybody making less than that is receiving more than they're paying, because this isn't even including what they're receiving. This is just saying that they're not, their portion of the income, they're paying far less, and it gets less, 21%, 16%, 21% of the income pays 16% of the taxes. The next bracket down, 19% of the income pays 10%. So now you're paying about almost half of what that middle range is percentage-wise. And then the bottom 50%, so this is 50% of the country, makes 12% of the nation's income and pays only 3% of the nation's taxes. But when you include what we all get, somebody that makes that 21%, the top 1% income earner, if they're making 21% of the income in the United States and paying 40% of the taxes, they don't get, they don't get 40% more roads, 40% hotter water coming out of the tap, 40% more electricity. They get the same amount of everybody else out of society. They just happen to be, most of them happen to be more productive individuals that went through a long period of producing more than they consume, so they could invest, and they grew businesses, they employed people, they drive the economy. The top 20% or so, 10 to 20%, really does drive the economy a lot. And so it's just interesting to see. I would love to see. Bernie has like 4 houses and a whole bunch of cars and things like that.
Oh yeah, he's a
I want to see all of the socialists knocking on his door and saying, "Can you loan me a spare bedroom? And can you spare, buddy? Can you spare a dime? I'm hungry, feed me. They all need to show up at his house, and he needs to share his wealth. is what really needs to happen.
Right. He's a multimillionaire. That's right. So I wonder if he's paying his fair share, Mike. So my reaction to him is punishing the successful in life is not a formula for having a vibrant economy. So
yes,
and don't forget that when they passed the income tax law back in 1915, I think it was 1916 when it was first implemented, and you had to pay, the bottom rate was 1%. And now look at it.
If you inflation adjust the amount that you had to make to be eligible to pay that 1%, it was like $500,000 a year. You had to be in the top 1% to be eligible to have to pay 1% of your income.
Right.
And it did range all the way up to 5%, but you had to be somebody making like the equivalent of $20 million a year to even get into that 5% range or more. I can't remember what it is inflation adjusted, but it is astounding how they snuck this thing in, and then how rapidly, once it was made legal to have income tax, how rapidly they shifted everything over to the middle class and the common man.
Right.
One of the things that I like to look at is when you include what a business, the matching taxes that a business pays for an employee. People look at their income tax. They don't realize that all of the matching taxes, the payroll taxes, Social Security, Medicare, everything that's matching by that all of that is paid for by the employer. The employer wouldn't be paying it if you weren't employed. Therefore, it is part of your income tax. It's just paid for by somebody else. But since you are employed, all of this extra tax, people don't realize that they're already, the average person is like in a 50% tax bracket. Even if they think they're only paying 15 or 20% or 25%, they're actually paying about 50%, 60%. And then you add sales tax, which is another tax on the income. You make this currency and then you try and spend it on something, and you got to pay tax again on basically that same currency.
Right.
So when you add it all up, most of all of the energy that drives the economy forward, the compensation that we get for the goods and the services that we produce is being siphoned away by government and redistributed. With all their little pet projects. And, you look at the nightmare web of tax law and all the things, vote for me and I'm going to give you this, and nothing is free. And the bigger this web gets and the more layers of bureaucracy, the less actually flows back into the economy as something productive. Imagine the level of prosperity that we would be seeing if all the people involved in the bureaucracies of everything, and I'm not just talking about the government, but all the attorneys that you have to hire to be able to comply with all the regulations and everything else. If those people all had to go out and produce a good, or they had to figure out how to make a living producing something that you will willfully open up your wallet, pull out some cash and spend on that they will be able to vote with their wallets. The level of productivity in the world would be astronomical compared to what it is now. And all of our prosperity, even the poorest, would be far higher. Because if you look at the levels of poverty, when the world was poor many, many, many centuries ago, when everybody in the world was poor except for just a few royalty, the level of poverty was just above starvation for the poorest of the poor. When a society is rich, even the very poorest people do better. And there is a mountain of evidence supporting all of this. Anybody that is interested can go to look at the Freedom of the World report and economic freedom of the world. I'm sorry. So anyway, what else do we have, Jeff?
Yeah, that's some great comments, some great input there. The bottom line being that we would be much more prosperous if tax rates were much lower and much more reasonable. So we'll watch and see if Bernie pays his fair share.
If we didn't have all these people riding for free, basically, and imposing a drag on the system, it's like putting sand in the gears of a clockwork or something like that. When they impose this drag, it just slows everything down, and it hurts the economy in general. And they are getting to ride. They aren't providing a good or a service that anybody in their right mind would willfully open up their wallet and buy.
Right. Good point. So, okay, well, if you're liking this video, please hit the like button for us and subscribe to the channel. That helps us out a lot. So, Mike, we'll on to our meme of the day. And so actually it's a quote of the day. So you want to share this quote with us, Mike?
Sure. I used this a long time ago in my Hidden Secrets of Money, I believe, episode number 4. The modern banking system manufactures, they're calling it money, I'm going to switch it to currency, out of nothing. The process is perhaps the most astounding piece of sleight of hand that was ever invented. Banking was conceived in iniquity and born in sin. Bankers own the earth. Take it away from them, but leave them with the power to create credit, and with the stroke of a pen, they will create enough currency to buy it back again. If you want to be the slaves of bankers and pay the cost of your own slavery, then let the banks create currency. Lord Josiah Stamp, former director of the Bank of England. Now, I tried doing research on this, and there was one place that did research on it that said that this wasn't an actual quote, that somebody had made this up back in the 50s or 60s, but it may or may not be, but it's true.
Right, that's the point.
Thanks.
That's a good one. Thanks, Mike. I'll see you next time.
Okay, see you later, Jeff.